When we think about from those high highs of 34%, I think I put in my note to clients last week, it was like 33.79, so let's just call it 34% down, right? And then we've risen another 30% back up. And so we still have economic news that's, not great. We still have uncertainty around reopening. We still have uncertainty around the virus. Is there going to be a vaccine? When is that vaccine going to happen? We have unemployment at least at 15%, probably much higher than that. So I guess just why do you see the markets responding so well now, up 30%?
Yeah, Scott, it's a really important question because it seems like it's climbing a wall of worry right now.
Yeah.
And I think it's a good reminder that the stock market is forward-looking. When it looks at valuations and looks at companies, it's looking at their forward, what they can bring in the future, right? What the economy can bring in the future. And right now, the economy, the stock market sees the U.S. economy starting to reopen. It sees the number of infections, the growth rate of that number of infections starting to decline. It sees our progress on treatments for the virus and a vaccine. It sees progress in that. It sees people still going back to work. And it sees unemployment eventually falling, right? And so it sees all these things that are helping in terms of what the market sees moving forward. And if you want any further proof that the market is forward-looking, think about this. We fell by 34%, between late February and late March, while we still technically had record low 3.5% unemployment. And record low in the past 50 years. We haven't seen 3.5% since 1969. And yet we still fell by 34% despite the economy doing well. And then what we found was, unemployment, to Scott, you mentioned, jumped. We lost 20.5 million jobs in April. Unemployment skyrocketed to above 15%. And what did the stock market do? So the stock market didn't wait for the economic numbers to get worse, for the stock market to fall. It also has not waited for the economic numbers to improve for the stock market to start to rise. Another point about why this market has recovered as it has, we talked about the April jobs number. 80% of the April job losses were furloughs or employers laying their people off temporarily.
Yeah.
And that's really important for two reasons. One, it tells you what businesses believe about this lack of demand recently. Businesses, if they thought this lack of demand was going to be long-term, they would have laid them off permanently, not temporarily.
Right. Yeah.
And so the fact that businesses, and by the way, the way businesses act matters to the economy, because the longer businesses shut down, the harder it is for them to ramp back up, and people can't consume if businesses are not open. The second reason why that furlough number is so important is if 80% of those 20.5 million jobs lost in April were furloughs, what it means also is that those people who lost their job will be able to get back on their feet and get back into their job sooner than if they lost their job permanently. And what we know is with the economy being 70% of the economy is made up by the consumer, by you, me, and everyone on the call consuming, is that those people who have lost their jobs, the sooner they start working again, the sooner the economy gets picked back up on its feet and can start to regain a level of normalcy.
Yeah.
So those furloughs have made the fact that those were temporary layoffs gives us confidence that the economy can recover sooner than later. And the final point I'll make on why we've seen the market climb so far over the last month plus is the government intervention, the stimulus, right? We've seen the Fed cut rates to 0%. We've seen the CARES Act, implement $2+ trillion of stimulus to the economy, to direct payments to people, beefing up unemployment benefits to those unemployed. And so the stock market's reaction has clearly illustrated that the market believes that this stimulus will provide a life raft, if you will, to bridge the gap until the economy can get back on its own feet.